is the world heading towards a recession? This is a question that is being posed to economists worldwide. A few months ago, our Minister of Commerce, Mr. Piyush Goyal, said that India should aspire to create 75 unicorns. Now, what do you mean by this term unicorn? It is a company that has a valuation of more than 1 billion US dollars. In the startup world, this was supposed to be an anomaly before 2013, but after the pandemic, after the first lockdown of 2020, the significant rise in the number of unicorns and the significant rise in the valuation of all the tech based startups has created a moment where the entire market was seeing a phase of digitalization of services. But suddenly, in the past couple of months, after the US inflation data came into the debate, we have seen almost 50% of the market value of a lot of companies being wiped out in the US markets, and the same thing is happening in India also. This prompted all the economists to question if we were in recession, a period of slowdown. Now, if you have to understand the context of all the news coming forward till 2023 end, this video will kind of set a context. Paytm Mall, this company was valued at a certain price, and from that datum or that point of reference, today it has lost 99.7% of its valuation. It was also a unicorn startup. So this means almost 99.7% of the wealth has been wiped away. Why are we witnessing this phase? Is it good for the economy or something is bad? This is what we are trying to understand. Does recession essentially mean everything is bad? In the economic survey series, we have already seen how economy has two sides, namely the supply and demand. And only when supply and demand are in near equilibrium, the prices will be within a controllable range, and it also aids economic production. When this equilibrium is disturbed, it leads to a slowdown in economy, and if it is prolonged for a certain amount of time, it becomes a recession. And it happened twice in the near history that we can think of, one in 1929, the other one in 2008. It is important to understand the consequences of these recessions and the lessons that it taught to the world. Firstly, we have seen the ill effects of mindlessly printing money. If you can see the impact of this Great Depression in 1930s across Europe and also in the United States, money was so abundant that the inflation was simply out of control. Similarly, because of poor decisions and poor regulation in 2008, which we will be discussing further, we have learned certain lessons which have an implication even in the present times. We will look at that. However, the consequences of every recession will have more or less similar impacts. There will be a shock in the economy, and this shock will induce a spike in the unemployment rate, and there will be no demand. In order to ensure demand, government will print money, and it will increase money in the hands of people, and it will force people to spend. When you looked at the strategy adopted by the world to deal with this pandemic, it is more or less similar. We have already discussed in the first video where there are certain countries like US, Japan, etc., which have pumped in significant amount of money into the economy just by printing, freeloading of money. And our economic survey this year calls it the waterfall strategy. So certain countries, just like how waterfall is a free fall, pumped in economy without having a awareness on the consequences up till 25% to 50% of their GDP, depending on the various economies. The results are quite obvious. Inflation is out of bound. US is not able to control its inflation. It is nearly 8 to 9%, which was unprecedented in the near history. So, this brings us back to the point, are we heading towards a recession? Global economists say yes, we are moving towards a recession, and the period of 2023 and 24 is going to have this period of recession for a very prolonged time than anticipated. And all the credit rating agencies started downgrading a lot of stocks in the markets, and this has resulted into a fear of job loss and pain ahead in the Indian economy as well. But is this a really bad thing? Let us understand. Remember, we talked about a concept called creative destruction. What does it mean? It means that bad money is pushed out and new money comes in. Simply put, let's take the example of a floppy disk. Back then, floppy disk was a useful storage device for our computer. But today, we no longer feel the need to have floppy disks. So, although this is a useful invention back then, according to the time, markets reinvent themselves and therefore old firms become redundant or reinvent themselves. In this process, what happens is creative destruction. There will be a temporary phase of structural transformation in the economy, which puts the businesses in a downward trend. Because of the COVID impact, there was an increase in a mad rush for investing in companies driven by technologies, and the valuations increased multifold in this wave. What we are witnessing presently is a combination of the correction of these valuations across the world, and because of this valuation correction, let's say for example a startup X, because of the funding it got, thought that it is worth $10 billion, let's say for example, and it recruited people based on this $10 billion valuation and expected business. But the reality is the inflation across various economies is as high as 8 to 10%, and people are simply not spending. When people are not spending, these companies cannot ensure that this sort of jobs and the salaries that they should give remain sustainable. So they started firing people. Obviously, when firing happens, people will lose hope that just because our neighbor is losing jobs, maybe even we can lose jobs, therefore we have to save money and not spend it. This results in a slowdown. That slowdown will induce a recession. This is a vicious cycle, as you can see. Let me briefly explain what happened in 2008. So 2007 was a phase of boom in US economy where people were getting low interest house loans. So housing market was booming, and sometimes even if the person is not in a position to pay back, banks did not do a background check and gave away loans. This was called subprime lending. Subprime means the credit worthiness of the person who is taking the loan is poor, yet without any proper checks and balances, they went on to give loans. But are banks really foolish? Why did they exactly do that? Here is where we have to understand a new concept. In the stock markets of US, there is a bond called mortgage backed securities. Let's say for example, I am a buyer X who bought a home by taking a loan from a bank A. So this loan documents will be used by A, that is the bank, and they create a bond saying that this person X has taken a loan from us, so you can use this as a collateral, and by this security we will pay you a fixed interest, and this will be placed in a secondary market. This is called mortgage backed security. Mind you, the security or the collateral here is not the house, but it is the loan document. Now, who would buy such kind of an investment? People did because they trusted the economy. It is the mortgage on the house, but not the house alone. Now, why would people buy such kind of a financial product? You might be wondering. Here is where you have to understand a second concept called credit default swaps. Let me explain this concept of credit default swap based on the screenshot of this movie, Big Short, which is based on the global financial crisis. Now, this is a company which is basically issuing this securities, and these securities are getting traded on financial markets because of the hope that this person will continue to pay his loan. What happens if this person does not pay the loan? They had so high trust on the ability of Americans that they would pay back their loans. that they did not even bother to think about this scenario. But there were certain sections of the Wall Street, that is the stock market traders, who witnessed that this tendency is not a healthy scenario for the economy. The actor in this movie, Christian Bale, is one such individual. So he goes to this Goldman Sachs and seeks an insurance against this credit default swap is an insurance against this mortgage backed security. So basically he's betting against the housing market. What does this mean? He thinks that the ability of these individual and many other such Americans is poor when it comes to repaying that loan. When they don't repay that loan, this entire structure would collapse. This is what exactly happened. The person who subscribed to this CDS, credit default swap, with a keen analysis of the economy, they became rich, and all the other financial institutions collapsed under the weight, starting with Goldman Sachs, which is the bank which went bankrupt, which triggered this 2008 global financial crisis. And it took years for us to come back from this global financial crisis. So the Basel III norms that we see today, even that is imposed by RBI, is as a result of this global financial crisis only. Similarly, the G20 global financial architecture and all the other systems like Financial Stability Development Council of Indian economy became even more active because of these events. So this is what happened. What is the point that I'm trying to tell you? After every financial crisis, we have certain lessons to learn. And 2008 is all about teaching the right kind of lessons for regulators. Regulators in an economy. It showed the importance of not leaving regulation to the markets. And that is why we have certain lessons to learn going forward and what happened in 2022. Every economy has a boom phase and a burst phase, meaning downward trend and upward trend. In 2019-20, Indian economy was already in a slowdown phase. The growth rate was hardly around 5%. Then came COVID and stock market crash of March 2020. As a result, across the world, money was printed. Now, this money needs to be sucked out of the economy, otherwise the supply-demand equilibrium will be disturbed. As a result, Indian stocks witnessed a huge overvaluation. So a lot of companies were artificially inflated. You must have noticed like a lot of firms getting listed. One of the most prominent one among them is Paytm, getting listed on the stock market, and they started to lose the initial value that they had. Zomato is yet another business. So we will come back to the question. Are we having a hard time? Are we going to see the worst in our economy? Not exactly. 2020, even though it is called a shock, has fundamentally altered our economy in the way of its structural shift towards digitalization. What we are seeing presently is a combination of inflation due to excessive printing of money and dumping of money into the economy by other countries. Obviously, when global level inflation is so high, it will impact Indian markets as well. And therefore, India, whatever is witnessing, it is probably because of the global scenario as well. Of course, there are certain Indian factors as well, but more or less, India is doing much better than other countries. Let's say, for example, if US invested or pumped in nearly 20 to 25% of their GDP into the economy, India was criticized back then, but it was right in approaching that. There was only 3.5% of stimulus given during the COVID times, and that too indirectly. One advantage we had after this is because since we were already reeling under a huge slowdown phase, this did not put more burden. Otherwise, we would have double-digit inflation. There are certain economies which are having 10 to 20% inflation also. But what is so bad that why are we expecting this recession would last until 2023-24? Why not a few months? Here is where we have to understand inflation that is unstable. Now, what do you mean by inflation that is unstable? Let's say in any economy, if a certain set of measures are taken, it would create a certain result, and this certainty is very important for markets and economy. But take a look at the amount of stimulus by all these countries which created an unstable inflation. What does this mean? One month the inflation can be 12%, and in another month it can be 4%. We don't know how the markets would be reacting, and because of this reason, and because of external shocks like lockdowns and breakdown of global value chains. Let's say, for example, in the entire last month, Shanghai was shut down because of the zero COVID policy of China. This disrupted the global value chains, and this disrupted the production levels as well. And because of all these reasons and the oil prices, there is unstable inflation, and this phase is expected to continue for another 2 years. That is the reason for the present expectation of inflation. So, what are the lessons that this pandemic taught us is what we have to understand from this going forward. The Sri Lankan economic crisis is a classic case for whatever we have discussed in a country. When the growth is slow, it triggers a vicious cycle. Let's say, for example, you have low money or savings. As a result, there will be low consumption. When there is low consumption, job cuts will be there, and as a result, low production. This low production will further trigger the job losses, and when there is a supply demand mismatch, it would create inflation. High inflation, low employment, low savings. A disastrous combo for any economy. So, these are the lessons that we have to remember. Every action has a consequence. That is why Indian economy did not pump more than 3.5% of the GDP. Whatever happened in the second phase of the COVID pandemic, that the second wave, is more to do with the lack of infrastructure and legacy issues pertaining to our health sector. It is not exclusively because of the low stimulus given by the government. So, in this scenario, whatever lessons that we would be dealing going forward, you have to keep these video and the context in mind. So, all the news articles going forward in Hindu highlights will have a connotation of this global recession and the possibility to come out of it. We will be looking at economy news going forward for the next 1 year through the lens of these news. So that's it for now. I hope you understood the concept. Thank you.